Everybody, hey traders, happy Wednesday. Welcome back to the final hour. It is just after 3 p.m. Eastern time on the 16th. Pretty busy day, a little bit of a melt up continuing on. And looks like I've got Andre popping in here. There he is.
What's up?
What's up, man? How are you?
Good, good. How are you?
Very good, very good. Are you in? You should be able to share your screen. Is that correct, Andre?
Let me try.
Okay, let's see what that looks like, and I'll play kind of production here. Shared screen, show on stream. There we go. There it is, man.
Perfect.
You got the screen.
Amazing.
Perfect.
Amazing.
So everybody watching live, everybody watching the recording, this is Andre with Edgeful, and we've had this in the works now for about a month, and I wanted Andre to come back in. We've done a couple of these sessions in the past, and every time I get the opportunity to spend, 30 to 60 minutes with Andre, he pretty much blows my mind with what's new in Edgeful and things that I know you've been working on a lot of stuff behind the scenes. You got a lot of tools to show, so I want to really turn the floor over to you and let you rip, man.
Perfect. Perfect. Thank you. It's a pleasure to be on. I always love the conversations. I'll quickly run through just a couple examples for those of the people who don't know what Edgeful is. I'll do a quick little intro, and then I'll go into some of the new stuff that's coming. Is that cool?
It's great.
Perfect. All right. So I'll use this gap fill as the example. So for those of you who don't know, Edgeful is a data analytics platform. It pretty much will tell you it tells you how often certain things happen. So we have 100 reports now, 100 studies. And in each of these studies, it will tell you the probability of certain things occurring. So for example, what we have on the screen right now is the gap fill. I'm sure a lot of you have heard of the gap fill. This is the study for that. This is the report for the gap fill. I'm going to walk you guys through top to bottom how everything is kind of laid out, just so you know like where to navigate once you do get onto the site. So I'll do it right now. Up top, we actually just added this section, and there's this what's in play. I'm going to get to this in a second. This is a brand new feature that we just released. It's very important, and in my opinion, one of the most impactful that we've released so far. In the toolbox, this is where all your reports are going to live. We have the navigation bar up top. This is where this is your steering wheel for the entire site pretty much. So we have stocks, Forex, crypto, and futures. So right now I'm in futures. We have 3 different types of reports: price action, volume, and indicators. Then we're within the price action report type now. So when you open this up, this report dropdown, you're going to see all of our price action reports. Then you go to your ticker. We have every ticker across all the assets. Now the session, which is really important, we have all the sessions, so you can filter your data by certain sessions. And then finally, the date range. This date range is how far back do you want this report to look? So in this case, it's defaulted to 6 months. These little bubbles here are like filters or sub-reports or like variations of the gap fill report. Then we have the visual representation of the results, the table representation, quick explainer graph, showing you kind of like a visual representation of what it's doing and what it's measuring. Over here to the right side, we have a little more explainers with some examples. Right here, we have our trading view indicators. As part of the subscription, we have 30 private custom indicators that we have written. So all you have to do to get access is click on this, put your trading view username into this little thing. You can find that by clicking your little profile button at the top left, right over here. And you're going to see my username is Edgeful. Yours will obviously be something else. Throw that in here, click get access. And once you go to your indicators, you're going to see all of our trading view indicators populated. Just continuing down, explainer text. What is this measuring? How can I use it? Here is a table that makes up all of the results of this report. So you can actually go back and see every single day if you wanted to. This price chart is connected to right here. So once you click, it'll change the price chart here. And then finally, we have the videos. These videos are super important. They will explain what the report is measuring, how you can use it with a live chart example, so you know exactly what's going on. So if you're coming across a new video, highly recommend if you come across a new report, highly recommend going straight to the video, watch it first. They're at most 5 minutes, so you can get a really good understanding, and then go back and kind of like play with it after you understand what it does. That was a lot of talking.
It's great, man.
Perfect. If anyone has any questions, just let me know. But if not, I'll kind of continue. This what's in play section. The reason that we built this was we have 100 reports now. Not everyone is going to memorize when every single one is setting up, and not everyone is going to know not everyone's actually going to go through and learn about each one. So we want our users to still get the advantage of all the reports without requiring them to memorize everything. And that's what the what's in place section is for. It will, using live data, it will tell you when certain reports are setting up and all the details that you need to take advantage of that report. So for example, the gap already filled today, but I will show you what it's supposed to look like. Just give me 1 second so I could pull it up. Just 1 second. Okay.
And as you're doing this, Andre, I'm just going to go right along with you. So as you're using the what's in play, I'll just click on the same stuff that you are.
Perfect.
I'm just going to follow along too.
So before the gap fills, this top bar, so like this one that you're seeing over here, would look like this. So it would tell you that there's a gap up on whatever ticker you're looking at. It would tell you your target or your previous day's close. Tells you how big your gap is. So that gap size is very important to take that gap fill trade. Tells you how far away price is currently from your target, which is this $5 here. Tells you the status. Now the status is really important too, because if the status is filled, like it is now, it's no longer in play. So you do not want to focus on it if it's filled. So the status is really important. Tells you your bias, which is bearish. If there's a gap up, you want to target that previous close. If there's a gap down, you want to be bullish. And then here we have the streaks. We changed the design a little bit from the design environment to the actual production. And this whole thing is going to change too, because we're redesigning the entire site. But before I go into the site redesign, what this does is it tells you if there's a gap down. So you don't need to kind of figure it out for yourself. We will tell you. We will tell you the stats. We will tell you the last 5 gaps down that 4 out of 5 of them filled right here in the streaks area. We're going to be adding a date to each of these so you know, because this is not the last 5 days. This is the last 5 gaps down. And you read it left to right the same way you do with a price chart. So left is the oldest, right is the newest. So you'd see this over here is the most recent instance right here. Then as I go down, we also have the 15-minute opening range. Another incredible report, especially if you're trading ES or SPY or QQQ or NQ, etc. This, we're going to add a few things in here, but this will tell you your orb size, your orb high, your orb low. And what we're going to add in is to tell you, did the high break and did the low break yet? And then did a double break happen? The reason you want to know that is because for ES and also SPY, 70% of the time, price is going to break out of both sides. So let's say right here, there was a breakout and it said, yes, there was a breakout, then which would be to the top side. You can have a short bias now targeting that bottom side because 70% of the time, you're going to get that move down. Same thing for you, Chris. I know that you love selling options. Mm-hmm. Once one side breaks to the top side, you can sell vertical call spreads, expecting a move down. So this is like one of the ways that you can use this, and then a very similar instance for the initial bounce. So initial bounce, for those of you who don't know, is the high and the low of the first hour of market open. Really important to note here that we're talking about the buy rejection variant of this report. So what's important with this one is the order in which the initial balance was formed. So let me quickly show you what that means. So you can see, let me show you right here. This is a pretty good example. Right here, this is the initial balance, these 2 red lines. The high formed first, and then the low formed. And when that happens, I'm just going to go to this report quickly. If the high formed first, which happens here, the first break is to the low side 80% of the time, just under 80% of the time. So when you see something like this happening, where the high of the initial balance forms first right here, you can expect continuation down or that first break to be to the downside. Does that make sense?
Yeah, that's really nice. That's really nice. What is the
Perfect.
when it starts? What candle is that? As far as plotting, is that a 9:30 price point or
Yeah,
9:30 time zone
9:30.
timestamp? Okay.
9:30 a.m. Eastern time up
Okay.
until 10:30, which is the final. That's the close of the 10:30 candle.
Yep.
Yeah, the close of actually, depending on it's if you want the 5 minute, it'd be the close of the 9:25 candle
Right.
would mark the end of the initial balance. So
Okay.
right here would be
So the start of the
right.
9:30 and the end of the 10:25. Is that correct? Just going for the first hour?
Correct. Yeah, it's just the
Yeah.
first hour, but also if you
Yep.
use the indicator, it will automatically plot it for you on
Gotcha.
every day.
Gotcha.
So
Gotcha.
just use the indicator, and I have it a little bit different here. But what it normally looks like is this. So the high and the low are right here. We
Right.
have the green to the top side, the red to the bottom side. So you don't actually have to worry about like plotting it yourself
I
because
gotcha.
we have the indicator that will do it for you. It's just called the Edgeful IB initial balance.
Perfect.
So in this case, another great example of you see the high forming first. So let me just zoom in really kind of close here. You can see right here, when the high forms first, which clearly the high is formed first and then the low is formed of this initial balance, 80% of the time you're going to get a move down. So if you're trading directionally with, like you're trading futures to the short side, you can buy puts to the short side, you can sell call spreads. There's a million different ways to take advantage of this, but that's what this report is going to tell you. And that also applies here to this will tell you, did the high or low form first today? Did it break out to the top side, etc. Then finally, in the what's in place section, we have the ADR report. And what this one shows is how much did price move today relative to the ADR. So you can see right here, today it has covered 90% of the ADR, of the 5-day ADR.
Yep.
So typically you don't want to expect price to exceed it because 60% of the time in the last 6 months, price will stay within this 43-point move. So you want to take your profits within that move and you don't want to expect it to exceed because it's typically not going to do that. So to maximize your profits, you want to put your profit targets within this bullish potential move and this bearish potential move. So we will actually tell you based on the current high and low of day, what the bullish potential move and bearish potential move is based around ADR. So the way that we get that is from the opening price at 9:30, and then it's a little bit complicated to explain, but pretty much we account for the move, like the high and the low of the day, and then we will like subtract out how much meat there is left in the bone based on the current range.
Right.
So that's something that I think is super valuable for people that like to use these ATRs or ADRs or these like average ranges, because this will tell you where your profit target should actually be.
Right.
So any questions on anything? I know I just kind of like went through a lot. You have any questions on anything?
One question on the ADR.
Yeah.
Do you have any best practices? Like, would you try to target, a 75% of the ADR or 80% of the ADR as opposed to going for the full target?
Yeah. So we actually have a report for this.
Okay.
And what you can see is the range to ADR by weekday.
Yep.
And what this does is tell you, this is this kind of small for you?
I can see it. Okay.
Is it fine? Can you see it?
Yeah.
Okay.
I
Okay.
mean, everyone
I
can
just made it a
chime in
little
there,
bit
but
bigger.
if we've got like, HD, I mean, the feed should be fine. I can see it on my screen, and I'm pushing it like 1080, I think.
Okay.
If not, maximize
So
the screen,
hopefully this is
everybody.
big enough, but
Yeah, we're good.
yeah. So what this report will tell you is the average range relative to the ADR. So you can see each weekday
Yep.
how much it will move relative to that ADR. So let's say ADR is 10, where I'm just making up numbers here. If ADR is 10, on Mondays it will typically move $9.50.
Right.
Whereas on Thursdays it will typically move $11.80, because this is 117% of the ADR. So that's where you can stretch a little bit more,
Right.
because the typical move is going to be a little bit more. And then each day, so it's like typically 95, then 93, then 104, and then you can customize your ADR length to be longer or shorter here. So
Okay.
some people use 14 days, some people use 5, some people use 15. So you can actually see this, and the same thing applies to ATR for those people who use ATR. It's the same report, it's very similar. The results might be a little bit different. Yeah, the results are a little bit different for ATR. And you can see again 75%, 80%, 90, 98, 90. So this is where you can say that's that guidance. Like, you don't want to take my word for it. I'll tell you where to put your profit targets based on the actual data.
Yeah.
Yeah.
It's interesting to also see with that report, you can almost tell that the market's kind of like churning through Monday, Tuesday, and when it really catches direction, a lot of times that direction is going to really fire up like Wednesday, Thursday, Friday. Also, the one report that also stuck with me, Andre, was the highs by weekday. When you can show that
Yes.
like Thursdays and Fridays have the highest percentage of weekly highs are created like Thursdays and Fridays. So just
Correct.
kind of giving the market a chance to grind all week and then try to finish like at highs by Thursday, Friday. So even if there's pullbacks and dips, Monday and Tuesday, the market typically is trying to grind higher. Obviously in a healthy bull market like we've been seeing this entire year, there's
Yeah.
not a lot that's been stopping these markets to the downside other than just aggressive buying the dips. But right there,
Correct.
that's the proof right there that highest of the week, and that's on ES, which is the E-mini futures. But the
Yeah.
SPY shows almost the same thing. Your QQQ probably shows
Yeah.
something very
Well,
similar,
I just
so
I
you'll see
just
those
switched to SPY.
correlations. Yep.
Yeah. It's the so in this case, you're looking at almost 70% of the time right here.
Yep.
And it's crazy that this stuff is like not really spoken about, but now you get to see like how the data actually is, and you can see it's Thursday, Friday makes up the majority of the highs of the week, and then also the lowest point of the week. So obviously, considering that the price is going to go up over time, but the low of the week, without question, is going to be on that Monday.
Yep.
So if you are swinging put spreads, entering that trade with a Friday expiration, you can enter that trade on a Monday, swinging those put spreads, expecting price to go higher. It's great.
It's funny you say that, Andre, because I'm actually doing a webinar on Sunday with this exact kind of hint in mind that we start
Yeah,
positioning on Mondays for this exact reason. With that,
yeah,
that historically is really significant.
yeah, for sure, for sure. And this is something else that we want to be able to, and not maybe not this report specifically, just because, or maybe we can, is right now we have the what's in play in beta
Hmm.
because we want people. We're eventually going to have everything in the what's in play, obviously,
Right.
but if it would load. Um, so eventually we want everything to be in the what's in play, but in terms of the priority of the reports, we want our users to tell us like, hey, I want you to include this one, I want you to include that one, so then we can prioritize properly the reports that we're going to put in here. So, for example, I just got a request today because NVIDIA had. I'll show you actually really interesting. Just give me a second. Give me 1 second. Let me turn this off. And you can see here on NVIDIA that the 15-minute candles, I'm going to go to this report here, the average consecutive bars. Where is it? Average consecutive bars on NVIDIA, not on ES. If we just give that a second. But you can see right here that, I don't know why this is taking so long. We just updated our database. Actually, if anyone's experiencing some issues because of the live data, it's taking a lot of the bandwidth of our, there it is. It's taking a lot of the bandwidth of our database, so we just upgraded it. So if you are having any issues, just let us know and we can try to get that sorted. However, you can see here the average consecutive 15-minute bars today had 7, and then the max green is 11. So once we start to approach that, no, sorry, I'm on the 5-minute. It's the max green 15-minute. Yeah, is still 11. And what you can see is that once you start to approach that max area, you can start to expect a red candle coming. So in this case, it did continue a little bit higher, but you can see right here, we're looking at 7 consecutive green 15-minute bars, and then that red bar came. So if you want to take your profits, this is a perfect place to start to take your profits if you're long. Or if you want to scalp short, expecting some red candle to come soon, you can do that too. This is the report to use that. So this was actually a request that we got to say, for the what's in play, can you tell me how many consecutive bars there are? And like, so I can keep that at the top of mind relative to the max or relative to the average even. So that's one of the ones that we're going to be adding in. The previous day's range is another one. The ICT midnight open is another one. I mean, Chris, if there's any you want us to include too, like obviously let us know. You don't have to let us know right now, but other ones that you might find interesting intraday, like while you're trading, would be really good for us to include to prioritize.
Yeah, I mentioned in a previous email the VWAP, like the session VWAP or the weekly anchor VWAP. I do a lot of trading around those. That's like basically it just acts as my kind of weekly magnet to see like if we get stretched away from it, we tend to come back to it. We break above it. It kind of acts as a dynamic level support resistance. There's a bias to it. So I mean, if we're above the weekly VWAP, we typically stay there. If we're below it, one of my favorite trades is just to look to get back to it. I mean, you have to remember when you're trading the S&P, you're trading these stocks. I mean, unless it's a stock that's just getting absolutely crushed. I mean, index wise, I'm essentially looking for the indexes to always kind of turn up and find some type of equilibrium, find some type of efficiency, or if it's kind of push lower, we're going to have some type of quick reversion, especially when it's gap filling. Looking for anything to be bullish is typically a bias that I have in the indexes.
Yeah, for sure, and that's something that we can do. I need to look into how we can do the VWAP because VWAP is a little bit tough because sometimes maybe if it's a daily VWAP, I mean, daily VWAP's not super useful, but just to look at this one sec, just so we can kind of like go through it together. So I know what, okay, so if we go to the daily time frame, right? How would you look at it or do you look at it on the daily time frame?
So the one that I'm looking at here, if you want to type this one in, it is the VWAP week. Or look at the just type in VWAP again and let me see if it's just type in VWAP. Go to auto. Actually, just click that top one there, volume weighted average price. Click on that one there, Andre.
Yeah, that's the one that I have up now.
Oh, you are? Okay. Can you go down to a 15-minute and then just let's check the settings together?
Okay.
Check the settings of that indicator. There we go. So change it from anchor period.
You want to do the change?
Go anchor period to a week. Go to a week.
1 week.
There we go. Yep. That's the one that I typically look at. And then I take the chart down to a 15-minute on the SPY, the QQQ, the SPX, the NDX, ES feed, NQ feed, MES, MNQ, right? Like, so right now, let me see if you're pulling up, pull up a futures feed on this one. Pull up like an ES feed. Because what we had this morning was a pretty simple.
Does it look like this for you?
No, mine. So let's see.
Like this for you? Like it's cut off on mine.
No, mine's like mine's actually to live price. That's
I have to wait till time frame close. I have mine wait for time frame close. Do you have that too?
Probably not. Let me check. Let me go settings.
Oh, you have anchor period. Sorry.
Yeah, anchor period is week.
I changed the wrong.
Oh yeah, that's right.
Yeah,
that's right.
Sorry. So
now we're good.
Perfect.
There it is.
Perfect.
Yep.
Okay.
So that's exactly what mine looks like.
Perfect. Okay.
Yep. So this morning.
So you're ignoring the sessions, right?
I'm ignoring what?
The sessions. You're just looking at
Correct.
it like purely like this.
Yeah, because I'm not going to get up and trade, at 3 a.m. my time. I'm going to trade, roughly the London Open or the U.S. Open from like 9:30 opening bell to maybe noon is going to be my futures window. I'm not before that typically. I'm not after that. I'd like to see the news. If we have U.S. news at 8:30 a.m., I'll look to see if the futures market has a reaction to that. Usually I bracket that as a news candle, and then if there's more flow above or below, that's a simple breakout trade. But this is a good example. Look at that support this morning on the price action for ES. I mean, that was around 9:45, 9:50 this morning, and we just came back and retested the lows from yesterday, and we went right back to that weekly VWAP, right?
Yeah.
So that's why I was considering the study is anytime that we're below that for a session or into a second day or so. If it looks to get a little bit overstretched, I'm typically looking like how much time or how many candles or how, what's the next day of like hitting that VWAP again to kind of use it as like a reversion to the mean type thing, right?
Yeah, makes
Yeah.
makes perfect sense. Yeah,
So
yeah,
that is
that
the
makes
indicator
perfect
that I've been
sense.
using. Yeah, I like that as just kind of a
Yeah,
roadmap for especially for futures trading. I use that quite a bit.
yeah, for sure, for sure. Yeah, that's interesting. I'll have to talk to our team about that one, and then I'll ask you follow up questions because I'm sure I'll have some,
Sure. Okay.
and we'll look to get that added in for sure.
Okay. That's awesome.
There's some other stuff that I want to show that's coming out.
Okay.
I'd love to get your opinion on it.
Sure.
So, kind of starting from like step one
Okay.
is, or maybe like considering like what your homepage will be or what your dashboard will turn into,
Hmm.
is going to be your bookmarks. So right
Okay.
here we have. I'm going to show you a few pages that this is in a design environment, but what we're going to do is redesign Edgeful so it's a lot more customizable and a lot more personalizable. So in this case, you're going to want, like we really want to emphasize the ability or the feature to bookmark stuff.
Hmm.
And the reason you should want to do that is there's a few reasons. One, because when you go to your bookmarker, like your dashboard or your homepage, you're going to be able to see multiple reports at the same time. So here, let's say you have your gap fill, you have your red and green days by weekday, you have your opening range, whatever, and you have all these things that you've bookmarked. You can see them on one page, which you currently cannot do.
Right.
You'll be able to filter them. You'll be able to filter by price action, the by trading style. So whether you're a swing trader, scalper, or day trader, you'll be able to do that. Then you'll also be able to build a watch list.
Nice.
So here you'll be able to put in SPY, Tesla, Nvidia, ES, and Q, for example, and then you'll have this on the side. So anytime you're on a report or on a page and you want to switch the ticker, you won't have to switch from futures to stocks and then type out what you want. You'll have them all on your watch list, so you can just go click, 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 and then switch through everything. Same thing applies to the bookmarked reports, and that would be shown right here.
Okay.
So this is going to be the new report page. Everything on the inside will be the same. So right here, we still have the very familiar um, the visual aspect, table aspect. The streaks are coming with the dates. So you're going to see the last 5 gaps up with the dates and whether they filled or not. Same thing will be for orb. Same thing will be for all the ones that have streaks. The table, the price chart, and then the explainer stuff will be all down here in one section below. And we're grouping it all together. So then once you know what the report is, you don't really need all these explainers. So we're pushing it to the bottom so you don't have to, it's not like clogging up that like main section up top.
Right.
But in this case, you'll be able to, and then we're adding the what's in play banner right up here. But in this case, you'll be able to switch from gap fill to orb to IB with one click because you've bookmarked it. Same thing
Right.
with the watch list. If you're looking at ES and you want to switch to Tesla, you can do that. You want to switch to QQQ, with one click, you can switch from futures to Forex to crypto to whatever else. As long as you have it in your watch list, you'll be able to do that. And we're just moving that nav bar to the side over here. So everything is still there. It's just to the side now.
Yeah, I think that, I mean, you and I, that was like one of the first things we talked about was, I mean, the way to do it through bookmarks is just allowing the
Yeah.
user to pick your favorite studies, have them all on one page, and then can you expand those? Like if you click on one study or one report, can you just expand those and like go into like the bigger screen? Or are you looking for are you looking for traders kind of to operate off of the bookmarks and kind of the favorites page?
In this here,
Yeah, like
yeah,
if you click on it, it will like show the actual study, right? Like
correct.
that.
Yeah,
Okay.
yeah, correct, correct,
Yeah.
correct. Yeah. Uh, Someone just said lost sound 3 minutes ago. Are you
I see
seeing?
that too. Yeah, I mean, somebody other than Mark, give me a confirmation here. I've been hearing you fine. Pop trying to use closed caption. Okay. Everyone that's watching here, give us like a thumbs up or audio is fine or AV is good. If everything's coming through loud and clear. I've been fine on my end. I'm not getting any warnings on the stream or anything, so I think we're okay.
Okay.
Yep. So I'll type a comment here.
Okay.
How is AV for others? I'll get a confirmation. Yeah.
Oh,
Okay, we're good. I think
okay,
we're good.
cool. Yeah, so you'll be able to see more details in here. Everything you bookmark, like it'll be like your place to go right
Nice.
in here. The one thing that I'm personally most excited about regarding this new design is currently we have this drop down. Perfect. Thank you,
Yep.
Terrence. So we have this drop down and we have a lot of reports that go in here. And what tends to happen is people and our users will only gravitate towards the reports that they see other people use and not explore many of the other ones.
Right.
And our solution to that is going to be this like familiar e-commerce like layout where you can discover these reports. So let me just make this a little bit bigger so you guys can really see it. So in this place, this is going to be the report discovery section. You're going to be able to pick your asset right here. Here you'll be able to select, you want to filter for price action and volume or whatever. You want to look at just price action. It'll filter everything in here. Mm-hmm. Then you can also filter by report categories. So chart patterns, session analysis, etc. And the same way that you think about like being on Amazon, you have your filters to the left, you have all your results in the middle. So here, let's just say that these filters show up for these reports. You'll see the outside days, gap fill, whatever. You can bookmark them right from here. We're going to have these little explainers that will show a brief little explanation of what the reports do.
Yep.
And then if you click on this explainer button, you're going to see this right here. This is going to be a little magnified pop-up that's going to show you again this same thing. And then in one sentence, we're going to explain what the report does. And in this case, what does this report measure? It measures how often price touches the previous session's closing price. That's the gap fill. Am I interested? I can bookmark it from here. I can go to the report from here. If I'm not, I just click off and then I'm back at the screen.
Right. That's really,
so
and you're saying for like 100, right? Like you've got 100 and just like you get a one sentence explanation plus a nice visual. Correct. To keep it really Correct. Concise. Like, yeah, because there's a lot of stuff to explore. And I'm sure that, I mean, as Edgeful is gaining popularity, getting more and more users on it, what do you typically see? And I mean, can you guys track where the most reports are being used? Is it you know 10 reports are like very high, like every single day, or how many?
Yeah, it's probably like 20. It's probably like around 20-ish because some of the futures traders look at the session reports and the stock and options traders don't have the session reports because like some of them will compare like London to New York and like we can't do that for stocks.
Right.
But for the most part, opening range break, gap fill, IB, initial balance, the midnight open is another one, high and low by weekdays another one. Like there are so many that previous days range is another one. I mean, there are so many that like people definitely use. There are definitely some that people that I don't really get questions about that I don't see people using too often. Like, I mean, the power hour breakout is another one. Power hour continuation is another one we just added. That's really popular.
Okay.
But for example, like performance by weekday, like I don't get too many questions about this one, which makes me think that people don't really use it. And it just shows the average performance for green day. Like if Monday is green, this is the performance you can expect for NVIDIA. If Monday's red, this is the performance you can expect.
Right.
Not a report that I get too many questions on.
Right.
But this section here will be a very good place where people can come in and discover more reports based on the filters. Like if I know that I'm a scalper and I only want to see scalper reports and I only want to see price action, now I can quickly narrow down all the reports based on this. Mm-hmm. So it'll be good for people to kind of digest a little bit more without having to do too much work of like going to the like kind of deciphering the name. Like for example, we have one called candle body ratio. Right. Obviously the name is made up, but it shows you the proportion of like the times of day where the body of the candle, pretty much like the most momentum. So where the body of the candle is the largest proportion of the entire candle range.
Right.
So in this case, this would be a low percentage. This ratio would be 25%. This one would be 83%. And you can see like certain times of day have certain patterns. But you wouldn't really know that based on the name of the report. So you'd have to go here. You have to click on the you'd have to click on the video, you'd have to watch the video, which is fine. They're only 5 minutes, but most people are not going to do that. And that's why we want to build this so people can go with one sentence, understand what the report does, and see it instantly.
Yeah. And also if that image is so straightforward that it resonates with you, like, oh, that makes sense, and then you explore
Yeah,
that study a little bit more and add another 5 or
exactly.
10 to your arsenal, bookmark them, see if they're useful. I see a question here from Papa John. Will there be one for options? I will say this, the first time Andre and I talked, he's an options trader. I'm a heavy options trader. There's a lot of ways to generate ideas using Edgeful by just getting some biases for the week. I mean, for example, we talked about Mondays
Yeah,
typically are the pullback days. I mean, if you're looking for an option that goes, has a good chance of going equal or higher for the week, putting on a simple bull put spread, early in the week and having it finish on a Thursday, Friday higher, that's a pretty good probability right there for an option trader.
yeah.
For intraday things, I mean, going like long the
There's so
SPY,
many.
or if you're going long puts or long calls, I mean, if you get more directional days, that's one thing that we looked at too. It's
Yeah,
like, opening ranges, or opening ranges and actually trading ranges on Mondays are usually very quiet, like 70+%
yeah,
of the time. Like Mondays are within the range, 70 plus
yeah.
percent Tuesdays within the range. So if you're looking to kind of sell options on those days, those are your higher probability days to be an
Correct.
option seller. You can
Correct.
choose, risk defined, undefined risk, things like that. But there's no shortage of ways to like generate ideas. It's just a matter of what I keep saying to traders about trading options is, how do you want to express your strategy in the market?
Yeah,
Because I use options to do pretty much anything. I mean,
yeah,
even like in the futures market, Andre, I take a lot of like broken wing butterflies in the futures market because we have a lot of volatility. I can place a trade, right now. I can place a trade at 8 o'clock at night. I can place a trade anytime I really want to.
yeah,
And for an ES trade or an NQ trade, I can do setups where, I mean, I can basically risk $50 to make $250, and set up an option trade where it's like
yeah,
there's no assignment on futures. It's going to be, cash settled when it expired. And
yeah,
there's all sorts of ways. So if you can think about your
yeah,
strategy in the market, you can absolutely get the ideas to give you those probabilities with Edgeful. Yeah.
yeah. And just even to kind of like even the simple form. Like if you know that NVIDIA, for example, will fill a gap, like a
Hmm.
gap up, then you can just take puts just to keep it super simple. Buy
Right.
puts targeting this area. For
Right.
example, in this case, we're looking at the opening range breakout, which is the high and low of the first 15 minutes. The no breaks is like practically like a zero chance, like it's less than 1% of the time. So even taking a straddle, long straddle, target expecting price to kind of
That's a
like continue
great
in either
point.
direction,
Yep.
you can do that. Like one of the reasons that we don't tell you exactly what to do is because there's a million ways to use it.
Sure.
There is not one way to use it. So, and then in this kit, like I'll show you, like NVIDIA, we're looking has a very high chance. Like breakout means price only broke out to the top side. Breakdown means it only broke to the bottom side of the 15-minute orb. And then the double break is when it breaks both sides.
Hmm.
So now the results here are extremely different than they are here. And now on SPY, you can see that over 70% of the time, you're going to get the double break.
Right. Yeah.
So in this case, like this has a very different strategy. Like you don't want to expect price to just continue. You want to expect it to do this, which like
Yep.
for a straddle is not good. Long straddle, you do not want price to go up and down.
That's also perfect for our daily profit play. It's a trade we're already in. Yeah. So it's an
Perfect.
income generator for us every day,
Um,
and that's proving it again over and over again. That's good.
yeah,
So really quickly,
exactly.
is
So
there any other component to that study right there on the SPY that shows if it breaks low first or breaks high first? I mean, are there probabilities attached to that, or just simply double breaks? I'm just curious because if we break lower, I mean, obviously
we
it'd be nice to
have,
like see it go up and then continue higher, but you never know.
yeah, we have that for, we have something, so the initial balance by rejection, we have that report. So initial balance by rejection is the one that I showed you before. But this one, let me actually change to the 1 hour, not the 1.5 hour. And you can see here, so the initial balance from 9:30 a.m. Eastern to 10:30 a.m. Eastern, if the high is formed first,
Yes.
the high of the initial balance is formed first, you can expect over 70% of the time, almost 73% of the time, price to break that low first. So today, again, or maybe it was yesterday. Yesterday
Can you
was
say
the
that one more
example.
time? You just said
I'm
if
gonna,
we
I'm gonna,
broke the high first, we test the
I'm
low
gonna,
first.
I'm gonna show you right here. So let's look at this.
Okay.
Market open is right here.
Yep.
Market open is right here. This line here. So here, the highest point of the initial balance is right here.
Yep.
Initial balance is just the high and the low of the first hour of trading. So
Okay.
the highest point is right here. The lowest point is right here, right?
Yep.
If you're looking from early to latest, the high was formed first,
Mm-hmm.
right? So you can see that the high was formed first and then the low was formed.
Right.
When this happens, the high is formed first. 73% of the time, the first break
That makes
is
sense.
to the downside.
Got it.
So I'll
That's
just go
wild,
to
man.
I'll go to a different day here. So you can see, I'll show you 2 days ago. Let me just zoom in a little bit. So you can see here, today, this day, the low was formed first. So the opposite of the day I just showed you. The low was formed first here. Then the high was formed right here. So
Right.
the high was formed after. And now you can see when the low is formed first, 65, almost 66% of the time, the high, the first break of IB is the high.
Right.
So you want to expect continuation upwards.
Yep.
You do not want to expect price to do this.
Right. Right.
Because that is unlikely. Now, it's not impossible because it actually happened today, as crazy as that sounds, which I will show you how this happens. Oh, no, it did not happen today.
I was going to say today it was low to high. Yeah.
Yeah. Today it did not happen.
Okay.
Yeah, didn't happen today. But we have it for this. So what we can do also is create this report for the orb. Yes, that is on any time frame because just referring to the Papa John's question.
Yep.
That is on any time frame because the initial balance is always static at 9:30 to 10:30. So if you're looking at a 1 minute or a 15 minute or a 30 minute, the initial balance is still the initial balance. It's the high and the low of the first hour.
Mm-hmm.
You can also customize this to be different times. So actually, I mean, we're looking at we can just technically go to the orb now and just go to the 15 minutes.
Yep.
See what the data shows for SPY. You can see that if we change this to the first 15 minutes now, this is how the data has changed. So 75%, almost 70%, similar to the first hour actually, which is kind of shocking. But it's actually not that shocking because if price forms the high later, it's near the high at the end. So you can expect continuation to the top side.
Right.
It's kind of like, yeah. So there's that. Then just to kind of touch on some of the other things that we're going to be building out. We're going to have this in it. So this is the grid view right here. You can see we have the grid versus the list.
Okay.
If you want to see it without the images, we can do that. So you don't have to scroll as much. It's not going to be like maybe you want to explore a little bit faster. You can do that in this format here. Then we have the reports. Obviously, I just touched on this. This is going to be very, very similar. And then that's going to be the bookmark confirmation. But now your what's in play is going to look like this now. So it's going to change from this here, this like where it's a very long scroll, because eventually we're going to have all the reports in here.
Right.
It's going to be like a really big scroll, and we don't want that.
Right.
So what we're going to do here is consolidate them into little cards, and each one of them will be different. So right now I just have it as opening range just for like the visuals, but you'll be able to, it'll be opening range, it'll be gap fill, initial balance, power out, like all these other reports.
Yep.
And then right now this would be the minimized or like the light version. And then you'll also be able to look at like the maximized version, which will have one row per report. So this will be the gap fill report. It will show you the streaks. It will show you the actual probabilities too. Same thing. This will be the opening range. It will show you all the data. It'll show you the streaks. It'll show you everything else.
Yeah. I like that. That's visually like what I'm more I'm
Yeah.
liking that, and I'm liking the. I mean, I totally like the thumbnails and the images. I'm definitely way more visual.
Yeah.
So when I see the image, and especially exploring those other reports and studies, I mean, yeah, I'll read one sentence and look at the visual. If that visual
Yeah.
makes sense to me, like instantly, then that's an easy study for me to wrap my head around.
Exactly. Yeah. And that's what we want to do. I mean, like it's definitely our biggest focus is to make sure that like data is intimidating to a lot of people.
Yeah.
We want to make it where it's we lower that bar as much as we can to where it's like as less intimidating as possible, as easy to digest, as intuitive as possible.
Hmm.
Because like honestly, in trading, you really do need to look at data if you want to be successful. Like it's just part of it.
Right.
Like the same way that if you want to be good at basketball, you have to be in shape. Like you cannot not have good cardio and be good at basketball. Like it's just not how it works. It's the same thing here.
Oh, you
You
can
have
just be
to
a
look
you can do a spot up shooter, dude. Just sit in the corner.
at yeah, exactly. But it's just part of it. Like you just have to. So it's that's the way that we're approaching it. We want to make sure it's as easy as possible to digest. And oh, here's another cool thing. We have a welcome quiz to personalize your experience like right when you come in. So right when you sign up, we're going to have this here, and you're going to see it's going to say personalize your Edgeful experience, and then you're going to go over and it's going to say what type of trader are you. Then it'll say what assets do you trade, what sessions do you trade, which tickers. So like we're helping you kind of like build your defaults and build your
Mhm.
watch list, and then build your bookmarks right here. So these will be recommended reports that we have for you, and you're going to see them, and then you'll kind of like be able to bookmark and like see the explainers and everything else right here.
Mhm.
I'm curious what your thoughts are on that.
Um, go back to that.
So it's literally
Yeah.
so it's going to be it's going to be just a quiz. It'll ask you what type of trader you are. So
Oh, I
like
see.
this is where we kind of get to recommend reports. So you'll be a scalper, day trader, swing trader.
Do one thing on
Here you'll
go back to that test. Can just since we have people watching, like, how do you know what you are? Like, I at this point in time, I trade pretty much any way I can, so I'm not really gonna like pigeon myself into,
yeah,
well, I'm one of those. But can you actually click
yeah.
on all of them
Good point.
or just one?
Yeah, you
I guess
could
let's
click
choose
on
all
all of
that
them.
apply.
You
Okay,
you
yeah,
can do choose all that apply. So
yep,
yeah, you can do choose all that apply. And then you can go here and you can also, all of them are choose all that apply. So you can go what assets do you trade, stocks, Forex, crypto, futures. Again, you can do choose all that apply. Then what sessions do you trade? This is all just kind of like helping you set your defaults or helping you build um, your bookmarks and your watch list. So
okay,
here you'll build your watch list before you even enter, so you don't even have to really do it when you're in Edgeful. And then finally, you'll have your recommended reports based on your selections at
okay,
the end. So and then here, this is again what the explainer will look like for you when you're in that first thing. You'll have that one sentence again, and then yeah, that's pretty much it.
nice. I think that's great because what's it gonna take a trader? 1 to 5 minutes to just go through and click a couple of boxes
Yes,
and have it.
It's only 5 questions.
Yeah, that's quick, man. I like it.
Yeah, it's only 5 questions. So we want like, and I mean, it's kind of like funny, but not funny. Like we have right here, this is not an annoying quiz. Like this is not like this is not like some like BS quiz. Like this is a real thing that's going to actually have an impact on your experience.
Right.
So like to kind of take it seriously and not just like we don't have the option to skip it, and we're going to do that on purpose. So you actually have to do it.
Okay.
Uh, for anyone that's new, like they'll have to do it just so they can actually have their default set properly and everything else. And you'll be able
Sure.
to change your answers in your account settings later.
Oh, nice.
But yeah, yeah.
Yeah.
So
I think that's cool because I think if somebody wanted to just initially go with like, okay, I think I'm a day trader, then click
yeah,
on that profile and see how the system and what you answer kind of tailors that experience. And then if you find yourself, you know, gravitating away from day trading, switch your settings, go more to swing or longer term, and then same type of thing
yeah,
is just looking out further is never a bad thing. In
yeah,
fact, that's probably the easiest way to start. Actually, I had a big session yesterday where I spent probably an hour and 40 minutes just talking through. easy ways to just think about the markets, dollar cost averaging, using some very basic industry standard indicators, talking about price action, and then getting into options at the end. So I
Yep.
think that was a nice little well-rounded thing. So, back to the questions that popped up here. It's like, I've seen, the variety of traders that you have on this too, Andre, it's a pretty wide range, right? I mean, I know that I
Yeah.
did the battle with James Bruce, and he is mostly a US 30 trader. He trades the Dow
CFD.
quite
Yeah.
a bit, and then futures quite a
Yeah.
bit. You have a lot of futures trader. What about Austin? Is Austin mostly an FX trader? Or is he in futures?
Futures.
Okay.
Futures. Yeah, we
Um,
we have crypto traders, we have forex traders, we have stocks traders, options
yeah.
traders. Like we literally have everything, which is
Yeah.
nice because we don't want to limit ourselves or like the access to this data to any specific asset. Like to us, it doesn't matter. The one thing that's really difficult to do is to get the options data is like practically
Yep.
impossible to get,
Yep.
which is
I
really unfortunate. It's just like getting historical options data is like a horrific process.
Sure. I mean, Tasty Trade, they just released. I've had the beta for about a month and a half. They just released their look back program, and I'm going to and they like beefed it up in a big way. So they can only go back to 2013 with their data. I have dynamic trends. I can go back to 2011 with that data. I also purchased, excuse me, option Omega. They only go back to 2013. So
Yeah,
it's a lot to carry that option data back,
yeah,
and that's there's so many things that change. I mean, I can set some crazy back tests where the mid price and the close price have to be hit multiple times in order to close. You take in all your commissions and fees. I mean, it's pretty ideal for like how good is this strategy over the last 2 years, over the last 5 years, over the last 10 years.
yeah,
So and that's, I mean, I pay for all that stuff, right?
yeah,
And so I know that it's not easy, but I mean, it is what it is. Like options trading, it's like, do you need all the data? Not necessarily, because
yeah,
I don't know if that's necessarily your wheelhouse to be like, let traders back test their strategies. But what is nice is, I mean, if it was something as basic as you establish this line in the sand and price goes up and it only came back, 10% of the time, 15% of the time. If you have something that shows like, look, you've got a 75, 80+% chance of a bull put spread, right? Where it's just you can let that thing go from start to finish, let it expire, let time work in your favor, and price only came back, 20% of the time
yeah,
over the course of a 20-day option, a 40-day option, a
yeah,
60-day option. And a lot of traders that I know too that trade a lot and they manage the trades early. A lot of times they just try to eliminate those final like 7 days of expiration,
yeah,
those final maybe 2 weeks of expiration, just to eliminate any type of the probability of touch or the probability of getting in the money,
yeah,
which could flip your option into a negative position. So yeah, there's a lot of ways to do it, and just also going after profit targets and options, and you manage early, you keep that capital efficiency really really high.
yeah,
Those are all, and it's again just like that. You rattle off all these ways to trade. It's like it's so subjective that
yeah,
it's difficult to put that all in one place. But what you do have is you have a
exactly.
great dashboard to show. There's a lot of ideas to generate. I think the nice thing is on a tip. And here's what helped me in a typical weekday. How often does price stay within a range? How often does price break out of that range? Like you showed us today, Andre, like the double break on the
Yeah,
SPY shows there's a lot of chop and a lot of churn
yeah,
intraday. And that
yes,
really is why we have the daily profit play, which is why I'm taking options above and taking options below, and we're trying to just extract some quick income
yeah,
from the S&P
yeah,
500, and we move about the business. So even yesterday, I would consider yesterday a lucky day because I had 4 trades, 4 winners, and it actually was a pretty directional day. I talked to a trader today that just bought puts yesterday and made a killing. He made like 200% on his puts, but it was also a very
yeah,
cooperative day directionally. Meanwhile, I still generated a nice profit with 4 winners. So there's a lot of ways to get
yeah,
the job done. It's just what's your strategy, what's your risk, what's your reward, and what's your probability.
yeah, for sure, for sure. It's it's so funny. There's like really an infinite amount of ways to take advantage of this,
Yeah,
even the data that we have, and that's why we don't tell you guys like what we do and or
right.
what to do with it. We don't have any signals. We'll never have signals. We're not going to have buy and sell signals anywhere. Even though a lot of people ask, we're not going to do that because you have to apply this stuff to your own strategy, to your own personality, to your own risk, and use it the way that's meant for you, because some people can sit at their screens all day, some people can't. So
Yep.
everyone trades differently. We don't want to say like this is the way to trade, because there's no one single way to be successful with trading.
Yep.
But
So
I mean,
consider
it
this.
was
Go ahead.
is a pleasure.
Yeah, you're good.
I was gonna say it was a pleasure speaking with you. Kind of going over these things. Always the conversations are so great when I talk to you.
Yeah, no, I know we get to
um,
cover a lot when we
but
talk,
yeah, I mean,
which is awesome.
yeah. What were you gonna say?
Well, I was just gonna. I mean, I dropped my link in the chat there for anybody interested in Edgeful. I got a referral code from the team, so save some money on a
Yeah,
subscription if you like it. You want to sample it. I know you guys give a trial for it as well. And I think of it this way. If you go through, let's just say as simple as that little 5-question quiz, just
yeah,
explore those different styles of trading. I mean, if you trade with me, I will trade short term, I will trade medium term, I will trade long term. I'm going to be like my method is whatever it takes. I don't care what I trade, how I trade. I'm just trying to carve out probabilities and profits. And so this is a great way for me to identify probabilities and profits. This is a great way for me
yeah,
to start, thinking about how I like to trade. And mostly it's options based. But if I have a ability to establish, a pretty firm floor for the day or a pretty firm ceiling for the day, I can trade around that. If I have a
exactly.
way to trade direction for the day, I can trade around that. And I can trade all sorts of directions. But yeah, I mean, I think if you explore the dashboard with all these things too. I mean, you're making it, from what I've seen this go around here, Andre, is you're making it easier and easier to tailor it to what the traders want. So the what's in play gives you a head start.
Exactly.
You bookmarking, your favorite studies and reports. And again, it's
Yeah,
price action, it's indicators, and the team is always very open and receptive to new ideas as well. Every time I
for
pull up
sure.
the Edgeful, there's always something new in that report section. So they
Yeah,
listen and they program a bunch of new stuff all the time. So that's very
yeah.
impressive and a testament to their dedication. So just
No,
giving you a
thank you.
shout
It
out there.
means a lot. It means a lot. It's a lot of work, and I mean, we're happy to do it. It's not as easy as it looks. Like a lot of
Right.
people just ask us, like the expectation is when they make a report request for it to be done like instantly, and there's a lot of that time that even just goes into building and checking that these reports are built properly. Like we
Mhm.
never release anything unless we check multiple instruments on multiple time frames and multiple like different sessions, like different like everything. We check everything. So
Yep.
it takes a lot of time for us to build, and like we obviously have a big backlog of requests. So it is a lot of work, but it's very fulfilling because like we are making an impact in this trading space and like helping people pass their funded challenges and everything else. So
Yep.
it is it's great. It's great.
Yeah.
But I appreciate you. I appreciate your time. I hope we can do this again soon.
Yeah.
And I hope this is helpful to everyone watching. Anyone who watches in the future, I hope this is helpful.
Yeah.
And I'm looking forward to getting these updates out so we can get some feedback from you guys.
Definitely. And yeah, I'm always a sounding board for anybody that comes in and they have the Edgeful, whether it's trial or subscription. You're always able to bounce off questions to me. If it's something I can't answer, I'll bounce it right off Andre
Yeah.
and the team. So you're in good hands. And this is, I think, the third session that we've done. Maybe
Yep.
the fifth or sixth, and fifth or sixth where we had some private ones. But I mean, again, you continue just to raise the bar, make this more robust, make it so it's just a great experience for the traders overall. And
Yeah.
keep up the good work.
Thank
That's
you.
that's all I have to say because it's a great tool.
I appreciate it. I
Cool.
appreciate it. Thank you. All right.
Thanks, Andre. Take care, man. We'll talk soon.
Have a good one.
All
All
right.
right.
Thanks.
Bye.
All right, everybody. I will do this. I'm going to grab the screen back here. Closing bell just sounded, so I'm going to go another maybe 5 or 10 minutes while I've got you. And let's do this. So I've got my screen. I don't know where it went, but I'm going to take it back here. So let's go replace screen sharing. Here we go. And move myself out of the way. Okay, guess not. Try this. Come on, screen share. Stop screen sharing. Let's try it again. Entire screen, share. There it is. Okay, so we just had closing bell. P&L on the day was pretty solid, up to a new watermark high for the portfolio. Lovely to see that, and we didn't have to hit all-time highs in the stock market. I'm going to see what earnings look like on Netflix. I actually, just before the close, I literally was doing it as Andre was talking at like 3:55. I did take another bull call spread on Netflix, so I have 2 of them in right now. I snuck this in at the close, so I have a 750 by 750 250 bull call spread for 83 cents, and I did a 725 by 727.50 that I went out to Friday's expiration. So with earnings for Netflix tomorrow after the bell, if we see Netflix actually go from current price, we should be expecting about a $55 move. And so if this one here is a let's say it's a break even. Okay, if it's break even, that's fine. If this one is a winner, that is $167 per contract. So what I'm hoping for is if I can turn both of these into profit, even if this one for 83 cents can trade for maybe $1.25, $1.50, grab some credit out of this one. And then this one I might just let sit and run through Friday's expiration because this is Thursday after market. So we literally only have Friday to manage the trade. And if we get this big, $40, $50, $60 pop to the upside on Netflix and it blows the tops off, then I'm looking at a pretty good chunk of profit here where I might actually close these out, you know, Friday morning. If we're way the heck up here at 750 plus, and I take what is about $1.73 total, okay, if I've got $1.73 debit, I'll put debit, DB, I guess. And if it's trading for, I don't know, I'm giving myself max profit would be $5. So that's my max profit, which means I can make $3.27 max profit. So just shy of a 2-to-1 on this. But if I can get this to trade for, maybe $3.50, that's almost 100% gain on my capital there. If it's trading anything greater than 350, I'll probably just take the profit and move on with another nice win on Netflix. So that is for Thursday's close. On TSM, I did a sell option on this one, and I believe today is TSM option. So I want to take a quick peek there. And right now we're trading post around 10 cents higher. I think earnings is tomorrow morning. Yep. So it's tomorrow AM on TSM. And so what I did is I issued, it's technically called an iron butterfly. What I'm doing is I am selling this one where I sold the middle and I bought the outside of it. And I'm looking for price to stay inside this expected move. So I'm hoping that is the case. I took this out to the 25th of October to see if I can just get, even if we had this like I had a Micron, this ended up happening where Micron was above for a couple of days and then came back to my level within 3 days. Problem was I had an expiration at 2 days. So that was my fault. So I'm doing this one where time works in my favor and I'm going out to next Friday, which is the 25th. So I have a TSM earnings play. I have a Netflix earning play, different strategies. We'll see what happens. And, semiconductors have been down a little bit. ASML is down even further today. I tried to look at a 1-1-1 trade. The numbers just didn't add up the way that I wanted to. I wasn't comfortable, taking on any shares at like a $400 stock. I could roll it, obviously. But here's what I looked at. It doesn't matter now because it's closing bell. But if I go to ASML, I was going out to actually like the December or January. And I thought, okay, well, if the stock price has dropped, the IV rank has gone up. So we're looking at about a 74.1 IV rank, which means I should have a little bit higher premiums. So where would I like to own the stock? Well, if I zoom out here, I'd be pretty happy with this stock if it is either in this level or this level. So anything just below 600, I might consider a dip opportunity, or anything around 400, same type of thing. Ideally, I'd love to say I'm going to keep it or take some at 400 or at least express some option trades there. And so I looked at, could I do that trade? And so if I did a, 450, let me switch this around. This is right. So I'll do a 450, get rid of this trade. So if I do a 450 buy put and a 440 buy put, that's going to cost me 12 cents to buy that. Okay. Now, obviously, that's way the heck outside this expected range. But if I go to that debit spread and I then decide I want to take some of these shares, at 12 cents, if I did a 400, I can still generate a trade here that pays me $1.15 by January, which the probability of profit's like 99.5%. It's extremely high that this trade works out just fine. The only issue is I was surprised how much buying power this takes. Now, maybe this is for a cash account, $4,000. but let's see. It's got to be for margin account, right? If I go to let me put this trade on and see what it looks like for an IRA account. Yeah, it's 40 grand. So it's definitely I mean, tying up $4,000 in a margin account isn't that bad. So ties up 4 grand in a margin account, ties up about 450 bucks on a portfolio margin account. It's crazy how much leverage you have in a portfolio margin account. Um, but is it worth tying up $4,000 to make $100? Let's see the return on capital there. So if I make $115 divided by $4,000 in buying power, I'll make 2.8%. And I don't know. I don't really want to tie up that type of capital. So I wasn't that impressed. I don't like the additional risk if I were to take this 400 and turn it into 2 contracts. Now I make $240, but now I'm risking even more capital. If I go to this account here, now it's going to tie up $8,000 in buying power, which I don't want to do. Okay. So point is, I didn't like the numbers on the trade. It ties up too much capital, so I'm not going to take it. But it is dropping nicely. If we come back into like 600 or lower, I might take a stab at an option play. We come back down to the low 400s, I'll take a stab at an option play. That's pretty much it for right now. I'm not that interested in just immediately buying the dip. But if we want to look at, what did NVIDIA do today? Let's take a look at the heat map overall, the currency strength. So, Francois, that's awesome, man. 585 SPY bonus trade at 70% profit. Very good. I'm holding mine at break even right now. So I'm going to see if that actually wants to push up or try to find that gamma level. This gamma squeeze at 585 has grown all day. We started right around 900 net. Now it's at 1552. So to me, this is a magnet for price. It doesn't really mean that market's blowing out any highs. I mean, the high was right here from Monday. That was Monday's melt up day. And there is the same strike level at 585. So if we open up, pre-market higher and we continue to push higher, I think that level gets hit. I'm hoping that it does. And I closed out a 584. I closed it out for profit. I closed out a 586 for profit. And the 585, I have a break-even trade on it. And if it goes up for tomorrow, then I'll look to manage some profit on that as well. Ideally, this ends up hitting my limit credit that I've already set in the platform. I bought it this morning for around 71 cents. It was trading for around $1.16 to $1.20 today at one point, like $1.20. And I'll keep an eye on this one for tomorrow. If we open higher, that should help. I don't know. Realistically, if I get $1.40 or better, I get close to a 100% gain on this. I might just take the profit and move on. Right? I mean, I've got a limit credit at 165. If I hit $1.40, I think I'll just take the profit. So we'll see what happens tomorrow. Trader Edge, what's your Discord? Yep, it is Chris Pulver Trading. So I will look at it right here. So I got a couple things. So I have a Discord. Here's my Discord channel. This is Chris Pulver Trading. Discord. There we go. And then in my Telegram, I also have a free Telegram. Free Telegram for everybody. And this is Chris Pulver Trading Telegram. Yep, these are all free. Telegram's free. Discord's free. And, I do have paid services. So, I mean, I have a daily profit play, which service I do live trade rooms every single morning. My trade alerts that I do with A1 Trading is called the Pulver Alerts. We're offering, I think they're getting ready to offer this really nice sale through the month of November with their software bundle. So you've got the Edge Finder, the stock box. You got the alerts that I offer, the alerts that Nick offers, the alerts that Frank offers, and Elvin as well. So the whole team offers some alerts with all sorts of asset classes. I was just asked if I would put together some type of additional education, which I'm in the process of doing because I have a course that I'm starting on Sunday. This week, if you'd like to register for it, I do have a webinar that I'm doing this Sunday. My weekends is just important to me as they are for you. But Sunday at noon, it's going to be October 20th. I'm doing a webinar at 12 noon Eastern time. Let me go to I've got a link right here. So if you'd like to join me for a webinar, we'll probably be live for maybe 60 to 90 minutes together on Sunday afternoon. Let me copy this link. And this is Sunday, October 20th at October 20th at 12 p.m. Eastern time. Okay. So so we do the webinar Sunday. You can join me Monday morning. around 11:30 to jump into a live session, and we're going to start the mechanics and the routine of that trade every single week. I just finished. I was up until it was like 11:30 my time, which is 1:30 a.m. Eastern time, and the strategy guide is done. The video series is done. The content, I mean, I think it's great. I think it's a keeper. I'm not just saying that. I'm trying to make trading as systematic and as stress-free as possible for all the followers that I have. Right now over the last couple of months, I've gone from having a few hundred people follow me to now, my YouTube channel is creeping up on 8,000 people. My Discord and Telegrams are creeping up on 1,000 people each. So, there's a lot of traders that I'm trying to be attentive to, and the more ways that I can have systematic, mechanical, the risk is defined, the risk is upfront. We know exactly what we're getting into, set the expectations, exceed the expectations. That's how I'm tackling all my education. Okay. So just like that. And also on top of that, I will be doing, I think Papa John gave it away there. I don't know what the price is going to be on it, but I'm looking at building, I'm finishing up this week. I'm doing a practical options course. And the reason why I'm calling it that is, everyone calls it simpler this, simpler that, easiest this, easiest, most bestest, whatever. Look, it's practical. Because if you want to trade bulls and bears or sideways, if you want to trade up, down, sideways, you want to trade the indexes, stocks, futures, options is a way to do that. Think about this. I can trade stock options, ETFs for the indexes. I can trade those options. I can trade the actual index options. I can trade futures index options. I can trade futures options. So oil, gold, silver, copper, corn, soybeans, bonds, all those I can trade options. They can all be defined risk. I can also trade currency options. Australian dollar futures, euro futures, Swiss franc futures, Japanese yen futures, dollar futures, Great British pound sterling futures, and I can even trade crypto futures. Options, right? I could trade options on literally everything I just mentioned. So is it helpful to have more assets to trade? I think so, because when you look at the components of an option trade, I mean, I'll talk about this for like 5 minutes, okay? If I think that ASML is going to keep going lower, there's an easy way to trade this, okay? So right now we're at 683. Well, if I just said, okay, I'm going to go ahead and sell a call right here above this top and buy a call right here. If it stays below this level, and it can come all the way back and test it but fail, if it stays below that level, I get paid for that trade, right? I get paid. So let's actually see. That price has a high around 8. What was the breakout point? So we started this crazy downward movement right around the high of 880. If I look at an options chain on ASML, let's say that over the next, let's go out like 45 days here. And I look at the November 29th, and that high was 880. Yeah, 880. So if I said, okay, 880, let's go to a call option here. Now, right now, that call option, I could sell a call at 880 and collect $2.05. Okay. Now, the problem is if I buy this, that's a bear call spread, but it actually asks me to pay for a debit. So obviously, I'm not going to do that. And I think this price would resettle after, we'll have to go to opening bell tomorrow. But this should not be the bid ask price should be a little bit cheaper on the ask side for a strike that's further away. So as an example, I mean this is silly how this is expensive. So if I sold the 880 and I buy the 890, that's a $10 wide strike. Let's say that I could get, realistically, I should be able to get maybe, let's say $2.50 credit. So let me just talk through the mechanics of the trade. So if I get $2.50 or $3 profit on the trade, and that's a little bit out of the money, we might not be able to get that much. But what I'm doing is I'm saying there is a probability that this trade on the call side will not touch 880 by November 29th. Okay. And so if I'm going to collect, let's say $2.50, what happens is as long as price by November 29th is still below $880, it can be $879.99, and I can still make my full credit on the trade. That's $250 of income with an extremely high probability over the next 45 days that I'm right. Okay. So is that a trade I'd like to take? Maybe, right? Or if I could get like $1.50 on a $5 spread, and so I could make $1.50 with a high probability, I could risk $3.50, and that's a risk I'm willing to take, but it's an income trade. And so you can look at ASML, you can look at, SMH, you can look at Johnson and Johnson, you can look at Berkshire Hathaway, you can look at Nvidia, you can look at MicroStrategy. It doesn't matter what it is. If you can trade it with options, you can basically say, this is what I want to do with the market. This is what I want to do with this particular instrument. I can read my prices. I can read my charts. I can place a trade. So yeah, options are good. Options, the losing side would be the risk on the trade. So if I collected 250 for a $10 spread, then my risk is 750. If I get $1.50 on a $5 spread, my risk is 350. So am I comfortable taking a bit more risk on the trade for a probability that's in my favor? Okay. And usually this is the reality too. The market typically overstates the implied move over the expected move. Or I'm sorry, it overstates the implied move of the expected move instead of the real move. So what that means is the brokers, the risk calculators, the market makers, they typically will overstate volatility. And as a seller of those premiums, the sellers of the cost of these options, you typically get higher probability. So even if you had, and I talk about this in my options classes, but even if you traded something that was way, way, way out of the money, like so far away from price, probability of keeping profit if you're an option seller is extremely high. Now there's risk in the trade. There's always risk. Okay. And I've had trades, and I had this happen maybe 3-4 weeks ago. I took a trade with the A1 trading team. And right, you're correct. So Trader Ed says, so you lose, roughly you gain $1 to lose $3. Correct. But if your win percentage is 95%, do the numbers on that. If you have 100 trades, you win 95 of them. Are you making some dollars? Yeah. I mean, you're making money. You have $95 in gains and you have $15 in losses, or I guess $25 in losses. You still make money, you know. So but that's what's nice is it's all just in the options chain. But there is risk, and I promise you, there always will be risk. There's never a free lunch when it comes to trading options. I've had a trade where I put in a trade here. It was a 4 delta when I started the day, and that ended up being a full loss. If you don't know what that means that price was all the way down here, and I traded something all the way up here, and it was a 4 delta, which means it is so far out of the money that there's a 96% probability this trade is in profit. And this market went all the way up, and I took a full loss on the trade. So that is an unpleasant experience, right? But it does happen, which is why there should never be a trade that's all in. There should never be a trade that's more risk than you're comfortable taking. And it drives me crazy when I hear traders like take these massive losses and they give back months and months of profit when it's like, how? Why? What did you do? It's like, I just think traders can be reckless. You get uncomfortable, taking some losses, you get angry, so you try to get your money back faster. It's like, look, if you take some paper cuts along the way and you do it small, you can always just stick to the process, get your way back into profit, and trade your way through a loss cycle, trade your way through a drawdown. You don't have to gamble. You don't have to double down. You don't have to martingale. All that's potentially going to do is get you into deeper and deeper holes if you're not coming out on the right side of it. So, look, trading is about surviving first and foremost, and then it's about understanding that the market does do the same thing over and over again. There's kind of hidden edges in the market you can exploit, namely just being bullish in the long term. That's the easiest thing to think about, is just be bullish over the next 10 plus years, and you'll probably be fine. Have the courage to sit in front of a bear market when it's falling 10, 20, 30% and be, have the buying power to buy. Have the cash ready to buy and see what happens over a 10 to 15 to 20 year period. It's probably pretty good. But that's out there and people don't think that way. It's like we are so conditioned now for instant gratification that people can't think more than today or next week or a month from now. But I'm telling you, when you compound these gains, and this is exactly what my Sunday webinar is about, is just stacking up profits week after week after week. And when they fall into place, we just get this big chunk of profit and we just have trades to roll and roll and roll. So anyway, it adds up really, really nicely. And we can we can actually take so little risk in the strategy and end up, competing or exceeding the benchmarks, which have done really well. I mean, the last like 7 or 8 years, we have seen the benchmarks outperform the averages by, 2 to 3 times what it normally does. So it's pretty wild how good the markets have been the last decade plus. And it doesn't necessarily mean it has to change, but it probably will. We'll probably have a pullback in a nasty bear market or a nasty recession or something's going to break. and it'll crumble and it will ruin confidence and it'll ruin sentiment and it's going to start from scratch again. But just like it did back in 2015, 16, just like it did back in December 2018, just like it did briefly in 2020, like it did through most of 2022, like it did back in 2008, 2009, back again in 2000, 2001, back again in 1987. All these times have happened, right? 90% of the time, traders spend their careers in investing in drawdowns. And yet you look at the markets and it keeps going up and we make all-time highs over and over and over again. So you got to give it time, but just keep that in the back of your head. Okay. All right. Let's see here. Yeah, good stuff there. All right. So ASML, I tried to find a trade. I was just talking through like a bear call spread as an option. I'll look at this tomorrow just to see if I can get like $1.50 for a $5 spread. I might look at that, but that ask price is way too big right now. So there's no way I'm going to take that trade. And what else happened today? Let's go to currency strength for the day. The dollar kept drifting higher. We've got the CAD on top along with the dollar, the pound, the Aussie at the bottom. And we've got Euro, Yen, Swiss, and New Zealand in the middle. I don't know if we have any major news tomorrow. Tomorrow we have the ECB looking to cut rates by 25 basis points. We got retail sales for the U.S. coming out at 8:30. I will be watching the futures market tomorrow morning at 8:30. So this was my breakout today. Just a really simple strategy. When we have the 9:30 candle on the futures market, here's ES, so your S&P 500. So this is your candle right here. This is your 9:30 candle, and you get a breakout above it. So you get a break above it, you get a push, a retest, and then a go. Pretty simple price action today, to be honest. And that would have been a really nice, if you took the first breakout, you wait for price to fill or pull back. I mean, if this is something that you trade, this retest would have been a great spot to buy with a stop loss below. This retest right here would have been a great spot to buy with a stop loss below. And then we have nice trend candles here. Nice push price action that ended up going higher. And we came right back to that weekly VWAP that I mentioned in that session. The NASDAQ, on the other hand, did not quite hit the weekly VWAP. So the NASDAQ has been underperforming compared to the Russell. Look at this. Just to spot check it on the day. The S&P was up about 0.4% today, 0.43 on the SPY. The Q's flat today. The Dow was up 0.74, so keeping pace, actually outperforming the S&P. And the Russell freaking smoking it at 1.65%. Good on the Russell. Good on the Russell. So my little IWM position should be looking a lot better now. Let's have a look here. So IWM currently up around $17,000 on the IWM. Hopefully we will continue to see higher highs. I've got some, let's see, March and February bull. These are bull call spreads, and I'd love to see these get some profit going. They are roughly break even right now. My 240 by 270 and my 245 by 270. These are roughly break even at this time. So actually, I take that back. These are actually in some profit now that I say that. I've got the 240 call. So I'm up about I've got about $400 of profit here. That's good. Let me take a look at this. Let me see if I can find a history here. IWM. I have a bull put spread right there that is right now in profit by about what? Looks like 50, 60 bucks. Try to go a little bit further than that. That's post-election as well. I've got the this is a ratio spread here. It's actually it's kind of like a what is this? Yeah, it's a ratio spread. It's a ratio spread. So the 175 is a buy put. The 170 is a sell put. I collected some decent income on that one. What I'm looking for here is the February and March, where I did a 240 by 270 bull call spread, and then a 245 by 225. I'm going to see if this closes at $4.33. Looks like I can close it out for about $280 profit now, but I'm not going to. I'm going to see if this will run a little bit. This one has the potential to pay like $2,000 or $3,000 if I'm right. So I'm going to hang on to this one a little bit longer and see if the IWM by the end of this year or into Q1 could actually try to make an attempt to get back to these all-time highs. So if we go to the IWM right here, and we have these all-time highs sitting here in the 240s, I'd love to see this. I'd love to see this trade. So if we can just push, take out these highs, establish some momentum, buy some dips, get up here towards these highs, get to all-time highs, love to take some profit there. So we'll see. I hope this happens quickly enough that I can get enough appreciation in the price of the option that I can benefit from that little gamma squeeze. Because I bought this like dirt cheap. I bought this thing for, I don't know, maybe $1.50 to $2, and let's see if we can get up to $3, $4, $5 of profit per contract. So we'll see. All right. Yeah. Thoughts on zero DTE? I love it. I trade very specific strategies for it. I'm really picky. I mostly like to sell options in a zero DT environment. If I'm going to do it every day, I'd like to sell options. But when I have some of my software that lights up for really good directional plays, whether it's a 0-day or a 4-day, I typically look at week to week. If I find some good opportunities, I'll take some short-term call options or short-term put options. Yep. So zero DT has been it's been a great change to the markets. It's been essentially what the markets have given. I mean, so much more order flow has come in over the last 2 years because of it, that in a way, the stats are showing that it's actually stabilizing the market as opposed to destabilizing. Everyone was worried about this zero DTE, this black box Armageddon situation where it's going to break everything and it's going to perpetuate like this, domino effect. What it actually did is it allowed market makers and trading desks and hedge funds to just stabilize, because they are going to fight at highs and lows to keep the market within relative ranges. We had a long streak, I think one of the longest in history, where we didn't have a 2% day in the markets intraday, and we didn't have a 2% down move day intraday. And I think a lot of that was because of the stability with zero DT. So, and the order flow is going to continue to happen. The volume when it comes to option trading, day-to-day option trading, is now like 50% of the option flow. So it's incredibly powerful. It doesn't mean that it's directional. Not every day is directional. I learned the hard way by teaching myself zero DTE on the SPY, on the Qs, on the indexes, and I was trying to grind every single day. And what I discovered was within about 2 or 3 months of trading this way every single day, I had some winners, I had some losers, and then I noticed, I mean, if I give a day or I give a week and I'm trading 5 days, there might be 1 or 2 days that are worth trading directional. And I don't know what days those are. Nobody does. And so rather than focusing all my time on trying to be directional, I figured let's focus on not being directional, which is the market has shown me routinely it doesn't want to be directional. So let's exploit that first. And then if we have something that aligns with direction, like I have on my Gamma Squeeze Index and some of my other software, then I trade directional. So I let the opportunities come up with the directional plays. Meanwhile, I try to stick to probabilities where we can win a lot by just selling options and taking that quick time decay. Yeah. Am I still in the SPY trades? I'm in one of them, Carla. I closed out the right here. Where's it at? I closed out the SPY trade here. I closed out my 584 and my 586 for profit. I got them for $1.32 and I closed them out for $1.90. That was about a 44% return on capital. And then I have my 71 debit that's trading for break even right now, and it's trading. It ended up sitting around $1 at the close today. So if we have a slight push higher, a gap higher, hopefully this gets back into $1.15, $1.20, $1.25. If we gap up towards 585, I'll close it out. Anything over, I mean, break even is fine. If it gets stopped out at break even, that's okay. But I'm looking for like $1.40 or better. If I can turn that into $1.40 or better, that's 100% on that SPY option. I'd be pretty happy with that, and then I'll move on. Yep. So, and I do think that the magnet looks pretty good to me. This gamma squeeze level it's grown all day. We had a net around 900, now it's up 1607. This has been in real time, just increasing all day. So if we have another push higher, or let's say retail sales comes in better than expected and the market gaps up, we'll probably have a way to hit 584 to 585 tomorrow, and we'll see if we can get some profit. Cool. All right. Well, thanks to Andre for that nice little bonus to share some time. He and I spent some good times together the last 3, 4, 5 months that I've known him through Edgeful, and it's just a great dashboard. What I like is when he comes on and wants to talk about and showcase the new stuff, there's always something to take away from it, and they just continue to add more and more features, more and more reports, which I think is really cool to tailor it towards what their traders want. And yeah, that was fun. And as always, I will be back at it tomorrow in the morning for Daily Profit Play. I'll be with Nick and the team at A1 Trading at 10:15. Back here for the final hour session tomorrow at 4 p.m. Eastern Time. I do have a masterclass for my Daily Profit Play. And then Sunday at noon, I'm doing my webinar on my waterfall income strategy. So it's going to be a busy remainder of the week and a busy weekend, but I'm looking forward to seeing everybody. And I'll see you tomorrow. All right. Thanks. Take care. Bye.